You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology and bring you some of the latest thought leadership in the space with new episodes here every Tuesday. We've got a great interview today. We've got a couple of my friends here from the Atlanta marketplace. Lynn Lobe, she's now with Valor Ventures, a venture capital firm. She's also formerly the CEO and co-founder of Cardlytics. Also be speaking to Robert Daniel. Lynn and Robert and I got together at the same time. Robert is at Georgia Tech's Advanced Technology Development Center, the ATDC as it's called to the locals, and he is their Fintech catalyst. And we'll be talking about what I think is a really cool opportunity, a pitch competition and accelerator program for new Fintech companies around here, and getting some pretty good insights, especially from Lynn in terms of how she approaches these things as a venture capitalist. Let me tell you that you can always find out more about the Best Innovation Group by checking us out at our website, big-fintech.com. You'll find our episodes here on the Bigcast at that website on the Media tab, or you can always track us down on Apple Music or Spotify. You can also track down the CU Town Hall, which takes place monthly on a Wednesday afternoon, usually the last Wednesday, it seems these days, if I'm not mistaken. Well, I guess this one won't be the last Wednesday. The next get-together will be on Wednesday, August 23rd at 3 p.m. Eastern, noon Pacific. Free for everyone to attend. It's a lively, interactive discussion. We invite you to come and be ready to contribute and join into the discussion. No fee, but you do need to register in advance. If you go to cutownhall.com, you'll find out how to do that, and you'll find the past archives of past episodes. We've been dealing with ChatGPT there for the last few times around, and I believe we're going to be doing that. Our Grand Poobah John Best and Mike Lawson of CU Broadcast will both be joining in and doing a little bit more of that on ChatGPT because it seems to be such a hot topic. And while you're at it, if you're thinking, for credit union audiences in particular, if you're thinking about how to implement ChatGPT, or even if you're just getting started and need to build some policies around it, things like that, I can think of a lot of worse places to start than checking out the Best Innovation Group. We've got a service line looking into development around artificial intelligence, specifically around generative AI. You'll find that at the website as well, big-fintech.com. Quick spin around the news before we jump into our interview. Was surprised by this one, just popped up this week. A couple days ago, PayPal has announced that they are launching their own stablecoin that's simply called PayPal USD. And as the name would imply, it is supposed to be fully backed by the dollar, should stay exactly pegged at a $1 per coin price. Also, some U.S. treasuries and other very liquid cash and U.S.-based denominated instruments to do that. The basic idea is to set up for Web3 transactions, cross-border transactions. You read the details, you could certainly see a possibility that at some point they may be used to circumvent some of the interchange around credit cards. And it's supposed to be available and fully compatible with PayPal pretty much now, and as they say, soon on Venmo, which of course is another arm of the PayPal operation. This strikes me as a real contrarian move. I found it interesting because, I mean, this is the time where most people seem to be kind of slow rolling or running away from, in some cases, situations around crypto. And this, stablecoin is in that ballpark, not the same thing as a speculative asset. It's supposed to have a hard and defined value. So it's interesting to see, and a lot of times I think that's the best time to get involved when everybody else is not paying attention. You can kind of dig in. It seems to be a long-term play that they're trying to get an established platform and an established bit of traction to be a key player and one of the incumbents in the space. And lo and behold, it's already getting some regulatory scrutiny, so we'll have to see where that one goes. But I will post a link to a story around that one that, again, like I said, didn't see it coming. Not sure how much impact it's going to have immediately, but it's definitely interesting stuff. Somewhat further afield, and also across the ocean, the English Premier League coming up on its new season, football or soccer, depending on how you call things these days. Getting more and more popular here in the States. The Washington Post just ran a quiz this week that would help you determine which English Premier League team you should support. A couple of friends of mine and I were looking at that and kind of discussing it. One of the things that came up is I'm always, the thing that's different about British, well, there's a lot of things that are different about British football and soccer, even compared to the American soccer game. But one that I find really fascinating is the notion that you don't even see the team's name on their jersey. You see the sponsor's name. And you get that a little bit. I know Atlanta United jerseys here in town where I'm at have American Family Insurance front and center, although it does have an Atlanta United crest as well. But it's even more prominent over in Europe on most of the teams and other leagues as well, but particularly in the Premier League. And if you really look at it, the majority, I might be exaggerating by saying the majority, but certainly more than any other sector that's represented in those sponsors, they're betting firms, whether they're online gaming or, brick and mortar gambling firms, which, I kind of am not crazy about, but that's the way it goes. Would I not support a team because their jersey had a betting thing on it? I don't think so. But I think almost sarcastically, one of my friends mentioned, are there any fintech companies that have a sponsorship relationship on somebody's jersey? Lo and behold, there is. And I hadn't really thought about this, but I have seen it before too. It's a company called AstroPay. It has nothing to do with the Jetsons. It is actually a payments company. And they are the shirt sponsors, as they're called over there, for the Wolverhampton Wolves. AstroPay was launched back in 2009. It appears to be a London-based private company, but their first launch of their product was in Brazil. They now claim to have a worldwide presence, primarily a digital wallet offering rewards programs as well, and a physical Visa card too. So I thought that was will I now be a Wolverhampton Wolves supporter? Would I choose my team because they have a fintech sponsor for their shirt? There's been dumber reasons. I'm not sure I'm going to go for that one, but I find it very interesting. Also find it interesting that AstroPay is not on the jersey, but if you look at their other sponsorships, they're also the sponsor of the Burnley team, which has been getting a fair bit of attention. There's some American involvement in the ownership, and Burnley just happens to be the town that we talked about a couple weeks ago because of the movie The Bank of Dave. And the startup kind of CDFI-oriented type British institution that was started up by an auto dealer, a minivan bus type dealer that wanted to start up a not-for-profit local bank. Ran into some regulatory challenges. Still trying to figure out. It looks like that movie may be showing up here in late August. So I'll be keeping my eyes open for that one yet. You don't see them on the jersey, but there you go. Bank of Dave, Burnley, Wolverhampton, AstroPay, all involved in some fashion. Anyway, let's get back to the main event. Lynn Loby and Robert Daniel we had a really great conversation the other day, just basically talking about startups. So have a listen. Okay, we got two for the price of one here this week on the Big Cast. We got Lynn Loby, who is a partner at Valor Ventures and was a co-founder and the former CEO of Cardlytics. Robert Daniel, better known as Red, is a fintech catalyst at the ATDC, the Advanced Technology Development Center over at Georgia Tech, and is the co-chair of the Innovation Challenge that's going to be taking place at Fintech South. Lynn and Rob, thanks so much for taking the time.
Thanks for having us.
Yes, thanks. Great to be here.
Lynn, let's start off with you. I mean, just to kind of set the context, you're now in the venture capital space, but before that, you founded a company in Atlanta. You took it public. This is Cardlytics I'm referring to. And you now have a mission to help other young software. I guess you can maybe get a little bit specific about Valor Ventures' scope and mission, but as I understand it, it's a lot of software as a service for the most part, not just fintech. We were just chatting that you actually moved to Atlanta to actually start Cardlytics. That was your foray into Atlanta. So can you say a little bit about what makes Atlanta and the Southeast overall special?
Yeah, sure. Yeah, you're right. We chose Atlanta when my co-founder and I were starting Cardlytics. This was back in 2008. We specifically chose Atlanta. And, we started by looking at what I will call, and I mean this respectfully, but the tier one cities, the obvious places where people do startups, Bay Area, New York, et cetera. But our Series A was only 1.75 million. And that wouldn't last very long in the Bay Area. I mean, that might cover your real estate costs to start a company, right? So we started looking at what I would call tier two cities in terms of startup and venture world. And Atlanta was definitely on the list. So were other cities like Charlotte or Austin, maybe even Boston. We looked at all those types of places. And Atlanta really rose to the top for three reasons. First, it is very inexpensive compared to a lot of those other cities that I just said. And when you're a startup and you've got 1.75 million, you need to make that last as long as possible. Atlanta has great talent. It's especially young talent. There's a lot of great schools here where you can tap into young kids. And, if you go to any of the big schools around Atlanta and ask who wants to be in a startup, you get a lot of hand raises. But then if you ask, do you think you can stay in Atlanta and do that? You get a lot less hand raises. So it really gave us a huge advantage to be one of the only young startups in a town that was traditionally corporate. And so, for those reasons, we picked Atlanta and we've been very happy with it. Oh, and I forgot the third reason. It has a phenomenal airport. And,
Yes.
I'm a 2 million miler on Delta. That was important.
And I mean, obviously that the hypothesis bore itself out, given that you've decided to basically take that same approach with Valor Ventures and staying here as well.
That's right. And I think it's changed a lot over the last 15 years. Like ATDC, existed 15 years ago, but was just hard to work with. I think a lot has changed. That's one example, and I know Red will speak to that, but there's many. I think Atlanta has now become a much more sophisticated market for startups and for venture capital, but it's still massively underrepresented compared to the amount of money that's in, the Bay Area or New York. It's massively underrepresented. And so, my mission, both with Valor, I also sit on the board of Endeavor, which is one of the largest nonprofits to help founders. My mission is to help bring more money to this city. I say it all the time. Talent is equally distributed, but money is not. And that's what I'm setting out to try and, I won't fix it, but maybe make a dent in it.
I got my first pull quote there. I like that. Talent's distributed equally, money is not. Red, can you maybe follow up on that with regard to, and first off, maybe just explain for folks who are not familiar with the ATDC, how that fits into the overall ecosystem and your role there, and then maybe a bit about the portfolio companies that, the common threads you're seeing with those that you're working with.
Yeah, I'd be happy to do that. ATDC is really unique. Most people, I say I work at ATDC and they take a double take and they think I'm talking about a rock band, but I always say, no, we do have some rock star companies that come out of here, but we're definitely focused on incubating various different ideas that are coming out of Atlanta and specifically Georgia. And we've been around for over 40 years. We started in 1980. So that's kind of a unique opportunity where Atlanta was really getting its legs and driving entrepreneurship and innovation. So we want to be able to support those entrepreneurs, everything from the ideation stage of I have an idea, but I need to learn what entrepreneurship is all about and customer discovery and some of those challenges that a young entrepreneur or a first-time entrepreneur goes through. But I really start working with companies once they start getting around MVP and are looking to really start to grow the business from there, focusing in on things like first-time pilots, proof of concepts, opportunities to kind of get that first revenue.
Just for anybody in our audience who's not familiar, MVP, minimum viable product, correct? So first out to the marketplace, first chance to really test it out.
Correct. Kind of that minimal basic, hey, I just built this. What does this look like? And you're going to pivot from there. And that's where a lot of our founders are looking for that product solution fit to get some traction and get some growth. From there, we go on to our signature companies, which are really looking for product market fit and start to scale towards Series A, Series B investment. So we have a pretty good life cycle from that. Most other companies think that we're more of an accelerator model where companies will come on for maybe 2, 3, 12 weeks at a time and go from there in a cohort model. No, we're evergreen. We have the opportunity to start working with our founders at any point in time and bring them into the program, supporting them for a journey that could be 3 to 5 years here. So I think that's really unique, and it helps where we've seen a lot more growth within Atlanta with other accelerators. I mean, the ICBA are great partners. They've got a fantastic accelerator, Creative Destruction Lab. There's some others, Techstars. So they're all operating here in Atlanta now as well. And this has kind of been recent over the past 5 to 10 years. And that pairs well with us, so we can kind of let our founders go into those programs and hit sprints, and then come back to us for the marathon run. So that's kind of what ATDC does, and how we kind of connect with others in the industry.
And to your role there, fintech is only one subset. There's multiple tracks, right? So you've got the fintech companies that you're really supporting, and how many of them are enrolled at this point in the ATDC fintechs?
We've got about 22 amazing companies in our program right now that are fintech or fintech related. That's very true. I focus specifically on our program, kind of helping them recruit, bring them onto our programs, grow and scale them up, look at plugging them into the industry by being an ambassador into the fintech space here. And then also looking at building community around fintech. So we're always trying to produce events that will connect founders, investors, and builders within the ecosystem. So we have a very rich and robust opportunity to grow the fintech space here.
And I've seen, as you know, I've been to plenty of those, and you do a great job with that. Yeah, you mentioned Series A and things like that. Lynn, Valor Ventures, I believe you are specifically, the statement on the website is seed stage, right? And just for our listeners, can you talk a bit about kind of how you kind of define those different stages of development?
Yeah. So we're really clear on our investment thesis. First, we're trying to represent underrepresented markets and underrepresented founders. That's really important to us. So anywhere in the South is an underrepresented market. And while we'll invest in anyone who is investable, we do try to heavily focus on that underrepresented talent, minorities, females, et cetera. So that's our first part of our investment thesis. In terms of what we're looking for in the companies themselves, we are very focused on B2B SaaS. That's sort of our sweet spot. It does not have to be in fintech, to your point. We actually have one of our investment committee members has an awful lot of healthcare background. So, we do fintech, we do healthcare. We've got a couple investments in AI companies, a couple investments in companies that are focused on climate change. So we do a lot, but they have to have a minimum viable product. To Red's point, they have to have product that's been in market and has a viable customer, or more than one viable customer, and ideally some amount of revenue. It doesn't have to be huge, but we do like to see some ARR building to make our investment. And once we do, we put our money where our mouth is. We really do support our founders. My job is to coach them, to help them get to Series A and scale and beyond. And that's what I do, all day, every day when I'm working for Valor. And I've been there and I've done that. So, any of the problems that they have, I've seen, I've lived firsthand. So, I really think we put a lot behind our founders. We don't just give them money.
Now, you mentioned that, they already have presumably some revenue, a customer, a minimum product. To get to that stage, if you're the seed, have they kind of done friends and family, bootstrap? How have they typically gotten to that level?
Yeah, it's a great question. Usually they've done some version of friends and family. Some of them have bootstrapped it themselves. Most of them have spent maybe $100,000 in some way, shape, or form to kind of build that minimum viable product and get it to the first customer. Technology is so advanced nowadays relative to what it was 15 years ago. You really can build a minimum viable product with very little expense. You can use the cloud, you can use AI. There's all kinds of cheap or free technology that's available out there that wasn't 15 years ago. So it makes it a lot easier for a company to actually get that product out there in market sooner than they were able to a long time ago. I think it's why we see even more startups now than we did 15 years ago across the country. Makes
sense that getting that customer probably a tougher putt at this point.
Yeah, getting the customer is always hard, but it's all hard, but it's some things have become easier for sure.
So, that minimum viable product, I think, is a good transition. Red, you're serving as the co-chair for the Innovation Challenge competition this year for FinTech South. That also requires an MVP, correct, in order to participate?
Very true. Very true.
So can you talk a bit about, I believe we've got 10 companies that are competing this year. Can you say a bit, maybe a bit about the program, but more specifically what it is you're looking for? I know you had a great applicant pool and only took less than half of the ones that applied to actually participate in the competition. What was it that set the 10 apart that you, if I'm right about the 10, that made the cut?
Correct. I have to say, it's been an amazing year for applications. We had 23 applications that came into Fintech South this year, which I think is a record number from most of the people I've talked to. And also really excites me because it says Fintech is very much well alive, especially in the state of Georgia. I mean, all these companies are Georgia based, so that's the number one thing that's part of the stipulation. Number two, we're looking for products that have an MVP. We want something that we can kind of take our mentors. We've got industry mentors, we've got some venture capital mentors, we've got other folks in the industry that are focusing on sales and marketing that can come and provide their skill sets to these entrepreneurs as they are going through their kind of growth journey during this 4-week sprint of both education, mentorship, and kind of cultivation of some of the aspects that we can get them ready for the pitch and rehearsal and kind of judging to get up in front of the Fintech South group. So that's one of the big components that we're looking for, is how we can kind of move that up. We're also looking for fintech products that might be a little bit unique. There's some that we saw that are fantastic and they'll do amazing things, but maybe not as attuned to some of the fintech growth opportunities that we see. And we had some judges that were able to kind of look at that. They've got a deep industry background in the fintech payments banking experience. And then we also wanted to match towards our mentors. So obviously mentors heavy in payments and banking. We had some other folks that were maybe more real estate focused that would have been more of a challenge to kind of mentor. So we wanted to see where we could kind of make the most impact with these folks. At the end of the day, they're competing for $25,000 of non-dilutive grant, which is an amazing opportunity. But really, it's the visibility as well of getting in front of folks at Fintech South. I think that's just as important, in having the capability of refining their pitch and tailoring that to those at the specific accelerator program that we're going through, as well as just networking with other industry individuals. Because $25,000 sometimes can't buy you that introduction to some of these C-suite executives who will be there and might say, hey, this would work perfect in our application that we're leveraging.
Yeah, I was going to say, I mean, $25,000 is clearly nothing to sneeze at, but based my perception and things I've kind of heard from folks who've participated, it's even if you don't win the 25,000, the exposure that you get and the visibility, you know, in terms of people to interact with. Without revealing any confidences, I know our reigning champion from this past year, Arkham Technologies, told me that literally as they left the stage, one of the executives of a much larger company in town, like literally intercepted him saying, hey, we should talk. I mean, that's the kind of thing that you get out of this, right? I mean, to me, that's the key.
And I think that's the great thing about Atlanta. There's so many different payments and banking players here that they'll be at this conference, and then they can come and hear these new companies and what they're driving towards, and maybe become a long-term mentor, maybe become one of those first-time pilots. It goes back to the community that Atlanta really builds around the fintech ecosystem. And it's just every day I feel grateful to wake up and be able to work and participate in this space.
Now, remind me, the pitch competition, which is really kind of what this all leads up to. How long are the pitches? How long do the participants get on stage to make their case?
About 8 to 10 minutes. I think that's about standard with most of the things that we see out there.
So Lynn, your role in this is going to be as one of the judges, and obviously, 8 to 10 minutes can feel like a long time, when you're up there on stage. There's only so much you can convey, and that's obviously a much different situation than when you're making an investment decision. You've got obviously much more things and a lot more background. How are you thinking about this? How are you kind of compare contrast? Yeah. How are you going to make a decision on what stands out relative to the process you typically do with Valor?
Yeah, no, it's a great question. I mean, typically any investor, including Valor, spend some real time getting to know the company, to your point. And the two big things that I think most investors looking for is, one, do they have a product and a market that they think is big enough to matter? And two, are the founders sort of capable and nimble? Most young companies have a pivot. Red talked about it. They have multiple pivots before they get it right. And so investors need to feel that the management is able to manage through those pivots, even though we have no idea what they're going to be when we make that investment. So that's traditionally what we look for: large market and, solid management. In 8 to 10 minutes, I think I'll be focused much more on the market and the product versus the management, because you can't, evaluate management in 10 minutes. But you can evaluate, is this a big marketplace they're going after? And is this product interesting enough to, be worth winning the competition? That's what I'll be looking for.
That's a really good point. I hadn't really thought about it that way. And maybe some of our competitors will listen to this before and actually take that into account in terms of where they emphasize their time over the course of their 8 to 10 minutes. Because you're right. I mean, there's only so much you can do to convince somebody about the management team, but you can certainly convince them about some of the more quantifiable pieces. Red, anything else? I mean, in terms, and I think what the 10 are going to be narrowed down to, what is it, 3 finalists that are actually going to present on stage for the broader group at FinTech South?
Correct, 3 finalists. I'll tell you what, it was very difficult to narrow it down to 10, and it is going to be almost impossible to narrow it down to 3. But we've got some great judges. We've got people with a great mixture in their various different industry components. So we're excited, and they'll have the hard job. I just get to work with them, so that my job will be a little easier for that.
And we're kind of back to that everyone's a winner standpoint too, because all 10 actually are going to get exposure. They still get an opportunity to be seen at FinTech South, even if they're not on the main stage, right?
Correct. We'll still be able to highlight them, show them off at the show, and make introductions. I'm sure we'll be doing that. I've been talking with most of the groups who came through from those 23 different companies. And at the end of the day, we're here to be able to support companies and be able to get them in the mix, plugged into the Atlanta ecosystem, and find ways to connect them with the partners that they need, whether that's investors, whether that's partners, whether that's customers. That's what we do.
Now, Red, I believe, if I'm not mistaken, you're an Atlanta native, correct? I know you spent some time in New York, but I think you are from here. Lynn, you are originally from Ohio, and I think you, as we said, you moved down here to start Cardlytics about 15 years ago, but you've been an Atlanta resident ever since. Anything else to say about, the market, the ecosystem in general? You've kind of talked about its evolution already, but, the fact that we've got FinTech South with over 1,000 people coming in September 12th and 13th, I think clearly that's a pretty good statement. Anything else you'd say about, making a pitch for the marketplace?
Well, no, I think Atlanta, there's still a long way to go. I want to be clear. We are still massively underrepresented in terms of the amount of venture capital that's here. So anything anyone can do to change that, I think, is helpful, because that's what ultimately what any founder needs is money. Ultimately. So we've got to focus on getting more here, but it has definitely come a long way in the 15 years that I've been here in terms of money and startup ecosystem. So, that's where I'm placing all my bets here, personally and financially.
And I believe the focus, I don't know if it's literally entirely Southeast, but Valor is focused on the Southeast, correct?
Correct.
And Red, you came back down to Atlanta, what was it, about 3-4 years ago now?
I came back during the pandemic. The pandemic brought me back home. It's one of those things where you stop traveling every 2 weeks, and then because you can't go anywhere during the pandemic, and it gives you the opportunity to think what you want to do. And I wanted to refocus on the Atlanta ecosystem. Lynn's completely right. We've come a long way, but we have so much further to go, and we need a lot more people who are intentional and who want to get engaged and really be a part of the growth that's to come in Atlanta and make it even a better place. I love the hospitality of coming back and people saying, I want to get you connected here. You should talk to this person and this person. That's what we need to protect, but we also need to be able to expand on what we're doing. There's a lot of players here in town that we need to just come together and participate as a group and push Atlanta forward. And we've got the right mix. I think we just need, as Lynn said, we need more capital. We need some more players partnering together, and we'll get there. We're definitely going to get there.
Totally agree. Lynn Lobe, the former co-founder and former CEO of Cardlytics, and I should add as well, a member of inductee into the FinTech Hall of Fame for the Georgia, the Technology Association of Georgia. And thank you so much for returning to help out with this process, and current partner at Valor Ventures. and Robert Daniel, Fintech Analyst at ATDC. If I don't see you before, I'll be seeing you both at Fintech South in September.
Sounds great.
Okay.
Thanks for having us.
Great chatting today.
I love that point. And who knows if any of the contestants in this Innovation Challenge will be listening to this in advance. But I thought that was a really good point that Lynn made about how she would assess an investment opportunity as compared to what you can really realistically kind of focus on and evaluate in a pitch competition like this. And I think that is good food for thought, and directly coming from somebody who's been on both sides of the table and has been at the table for both investment decisions and pitch competitions. So I'm hoping that I'll see a few more of you out here as well. Fintech South taking place here in my hometown of Atlanta, Georgia, at the Georgia World Congress Center. We will have well over 1,000 people there. I think I'm not sure if we're going to hit 1,500, but I sure hope so. I think that's about the number that we've hit in the past. It's a great event. It's a great chance to kind of see what's going on here in the Southeast. As Lynn pointed out, very underrepresented and under the radar still, getting more attention, but still somewhat under the radar. I've always talked about the fact that FinTech has two arms. There's the fin, is in financial services, and the technology. I think we've got the technology piece going pretty well. I'd love to see some more financial services, which you don't see as much of here, especially since SunTrust, who is still involved as Truist, but their headquarters has moved one state over into North Carolina. Synovus is involved. They're here in the state of Georgia as well, and the ICBA, the Independent Community Bankers Association, is very involved. So we have the bankers side. Haven't seen as many credit unions to date coming, and I'd love to see a little bit more of that happen. So if I can encourage any of you, please do check it out, fintechsouth.com. If you want to find out more about it directly, feel free to drop a line to me, and I'd be happy to tell you a little bit more about it. With that, another episode of the Big Cast in the books. Again, my name is Glenn Sarvati. You can track me down through my firm, 154 Advisors. You'll find me on Twitter, better known as Twitter, now more recently known as X, at 154 Advisors. You'll find me at LinkedIn as well. You'll find the Best Innovation Group on X at Big Fintech, or on LinkedIn as well, and our grand poobah John Best at JB Fintech. We'll be back again with next week with new content. You'll find this episode, you'll find the show notes. Do check it out if you can go to the website again, big-fintech.com. Go to the media tab, and you'll find links to the things that we've talked about, including Fintech South and the Innovation Challenge and the PayPal stablecoin, and AstroPay too. We'll throw them all out there, and you'll find new episodes. Give us a like if you're so inclined. Subscribe to the podcast, or just check us out every week. Come back to the website. You should find new content posted every Tuesday. Won't even tell you what it's going to be next week, but as I've said before, we're heading into conference season, hot and heavy, so there's plenty of content along those lines. Until then, thanks as always for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.